Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a brief look at what's been going on most recently and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into the video for today. So a BTC paired up with USDT on the BitGet spot exchange 1 hour time frame. We were following a WX, Y, X and Z structure yesterday. It looks like that's actually deviated away now, and you know, some interesting things. It doesn't actually distract us from this low point because I think we're going to end up in a similar position. But let's take a look at this, right? So as we can see, we went and we moved up. We pushed higher than the recent low over this side. That's not terribly too unusual. We pushed right up into our ascending trend line here and got rejected, but we more than likely actually got rejected on the 200 EMA rather than the trend line itself. So as you can see, the 200 EMA is your trend filter. This is an area that we've been rejected for a couple of times, or from a couple of times. Okay, so it's still basically heavy resistance right up here, and traders have control of the market here. Essentially, if we're below the 200 EMA, we should be in a bearish state of play, and therefore only short positions should be allowed, right? That's kind of like I guess the basic way of kind of approaching the market. If you don't understand market structure and things like that, these trend filters such as a 200 EMA can be great for basically allowing you to kind of control whether you go long or go short. So the fact that we're below the 200 EMA basically means that we should be thinking downward price pressure. We can also see that the 50 EMA, that's the red line here, we're also finding this as brief support at the moment, but I suspect we're probably going to lose this and we are probably going to be looking to move on down. So let's go ahead and reflect on what is going on, because I still think we have a move to the upside here. We have to kind of consider where we are in this particular structure. And so for the most part, if I measure this over here, you can see that our target range has changed ever so slightly, but it's pretty much the same. It's just narrowed down the field of vision here. Okay, so you can see it's between 28,818 to 28,954. So unlike the Z wave structure essentially is very wide because a Z wave can be so many different types of patterns, right? But when we have this particular pattern playing out, this kind of ABC structure, even though it's not an ABC, it's more of a WXY, you can see a more specific target range. Okay, so that's kind of where I think things are heading. Now this could end in 5 waves, it could be just a steep drop, and so forth. And as you can kind of see, if we take a vertical line and place it right here, okay, here you can see the stochastic RSI was actually reasonably placed whilst we had this pull to the downside and it took us into this oversold area. We could do something similar here and take us right down into our range and just bring us down into this oversold area on the stochastic RSI. So all in all, it looks like we have a very similar setup with a move to the downside to be had. And it is the weekend, so I'm not expecting terribly too much, just kind of a slow, boring market. I wouldn't expect this to be a straight line like we saw previously. I would expect it to be more long, drawn out, something that probably takes all weekend, something to that effect. But I can't time the market. It's just kind of my expectation of weekends essentially is that the markets are incredibly slow. There's not a lot of liquidity. People aren't really active in the space. And so, you know, when you have a bearish market that we currently find ourselves in, i.e. there's not a lot of people actually remaining in the space. And we can see this from, you know, various different trend and analytical companies, understanding, you know, how many people are actually, let's say, searching for something crypto related is actually on the decrease, not on the increase. Okay, there's little pockets here and there, but for the most part it's decreasing. And this is also very visible from the amount of demand coming in when we look at the volumes and things like that. They're also very much decreasing rather than increase. And this is all an indication of the bearish market that we find ourselves in, not in a bullish market. In a bullish market, there's an obscene amount of search volume, and there's a lot of volume coming into the actual markets themselves, bringing in liquidity. Obviously, liquidity is being sucked out of the market. That is what interest rate hikes do. Okay, we can see this with inflation. Okay, inflation is basically sucking liquidity out of the markets as well. Interest rate hikes are also preventing it and making it more difficult for people to have spare liquidity to throw at investments, and so liquidity is leaving the space. It is not coming into the space. So understanding these things is fundamentally basic to being able to understand whether we should be bullish or we should be bearish. Right now is not the time to be bullish necessarily. I do expect, though, some swings in the market. I do expect Bitcoin to be moving on up, but ultimately I would still be looking at breaks to the downside as in the longer term, because I do think that that is where the direction of the market is going to have to go. Okay, and we've spoken about this many times before. There's many different kind of black swan events that could occur, if we want to call them black swan events. Black swan events are really more something that you don't know about, but there are many things are going on around the world, everything from a housing crisis through to war, various different things. And even the Fed pivot will cause a crash in the market. So we have to kind of consider that, yeah, this market is fragile. It's not as bullish as maybe we want it to be. So on that note, we can see here my expectations are on the smaller time frames that will move down. On the larger time frames, though, we're probably going to coil up a little bit and then get a break upwards. I suspect that this is where this is heading. The lower highs and the lower lows does have a tendency to want to have a break upwards. So I do suspect that there will be a break upwards after we complete this structured move to the downside. We're heavily oversold on the daily chart, so I do expect time is coming for a bit of a break upwards. At the moment, we're getting rejected on the 50 EMA, and so yeah, we'll see how that one kind of plays out. I think, though, guys, that I'm going to leave the video right there, just nice and brief. If you found it useful and informative, smash the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out of the way, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.